of economic data out of Japan overnight painted a very widely divergent picture in terms of inflation, industrial production and employment. Joining me now to talk through the numbers is LCG's market analyst Ipek Ozkardeskaya. Ipek, looking at today's data, overall the employment data suggests that things are improving, but consumption data is weak and sluggish. What do you think of today's numbers?
So the economic situation is still very mixed in Japan. This is not what we can call a proper recovery. We have seen indeed that the industrial production has been 1% expansion in the industrial production this month from minus 0.8% last month. So this is good news. This has a positive impact on the employment market. However, when we look at the inflation numbers, so consumers are still very reluctant on spending their money. We have seen that on a yearly basis, a sharp drop from 2.2% to 0.3% on CPI excluding fresh food. So this is not very good news for the Japan economy. This means that the recovery is having a hard time getting some traction.
Well, I mean, we're still a long way off of Bank of Japan's inflation target of 2% by 2016. Looking at the numbers that are coming out of Japan at the moment and how the Japanese economy is performing of late, is additional easing in your base case scenario right now?
Well, actually, we can continue easing. There is no problem to, if we continue easing more, injecting more money in the system would actually bring the Japanese economy to 2% target, inflation target. But when we have to come back to reality at some point, the reality is that we have a fiscal issue, we have solvability issues. So at some point, Japan needs to find a solution to finance this huge monetary stimulus. So at this point, Japan and BOJ are in a deadlock. There needs to be a fresh solution other than just simply injecting cash in the system.
Sure. I mean, if we look at the jobs market, now the jobs market does seem to be picking up if we look at the latest numbers, but it's not actually equating into real wage growth. Do you expect this to change in the coming quarters?
Well, actually, we need structural reforms here because we are talking about the supply side. Monetary injection is one thing, putting this money, driving this money into the real economy is another. So seemingly, this money remains stuck in the financial system and it does not go into people's pockets because projects are not being done and there are no new projects in Japan. So this is a problem. This is the problem with the wages also. So people, the normal street people, they do not see this money at all. So at this point, if we do not see any structural reforms, there will be really little hope for the wages to grow to the levels that we would like them to be.
If we move over to the Japanese yen for a moment, it hit a 12-year low against the US dollar on Thursday, and it's still very weak at the moment. In your opinion, is further depreciation in the Japanese yen actually good right now for the Japanese economy?
Well, it is just a matter of time before we hit the 125 levels. For the end of Q3, all analysts are just looking for 130 levels right now. So we are quite low on Japanese yen against the US dollar. And this uptrend in dollar yen will continue because we will be seeing some US normalization and further US dollar strength. At this point, we are not sure that further weakness in yen is good. For big exporters, it has been great because of the higher competitive advantage on the international platform, higher export revenues. That has been just excellent. However, this is not the reality once again. We have got so much small and medium-sized companies which are making the majority of the Japanese economy, and these companies are having some hard time getting traction because the cost of imports are getting just too expensive. And in this situation, we are not sure anymore that further weakness in Japanese yen is good for overall Japanese economy.
Okay, all right, Ipek, thank you very much. That's all for this morning's Market in Focus, but join us for more market news and analysis later in the day. Goodbye for now.